G'day and welcome to this week's video. My name is Robert Gowdy and this week we really can't ignore the downturn that we've seen in the market. So going to give you a bit of an overview and explain what we're doing here as a financial advice firm and how we're handling our clients and what we're doing at the moment, but also consider what causes these downturns and the nature of them and the effect it has on people's emotions and the psychological side of investing really comes into play. So market downturns, obviously very irregular occurrence, full-blown crashes like we saw during the GFC or back the tech wreck of early 2000 or back of 80, I think it was 87 was a huge share market crash. Those big crashes where it goes down 30 and 40% are clearly more rare than a correction. And a correction is classified as a downturn of 10% or more. What can trigger them? Well, clearly the coronavirus. The world is really concerned about global trade and the negative effect that this is going to have on countries' ability to trade with each other, and it's going to reduce the amount of global trade by some percent. It's going to affect China significantly as countries stop planes coming in from China. China try to stop the spread by making sure people can't leave. So there's all sorts of mechanisms, which means global trade, global tourism will reduce substantially. So we've heard about certain companies might have a conference or a big board meeting of all their hierarchy in a certain city, that these things are just being cancelled because of the concerns around the virus. But crashes and corrections can come about because of terrorism, because of war, because of trade war, like we recently saw with China versus the US, and general economic downturns. So for the most part, these crashes and corrections, they happen very quickly. You generally don't see them coming, but the outcome of this is that investors become very conservative, very nervous, and often scared. And what this can do is push them into a stage where they feel as though that you become that scared, and you're looking at your wealth. And we all know we can go onto our portfolios at the end of each day and get an update of where it's at. And then people start to think about, well, how far further could it go down? Will it? Will I lose more money? And that forces people to make some irrational decisions. So, as a general rule, crashes, corrections are short term. Now, a crash can last up to a couple of years, like the GFC did, but in the time frame of a retirement, someone that retires at age 60, all going well, has 30, 35 years through retirement to live to their life expectancy. So a bear market, a crash or a correction that lasts 3-6 months up to a year or beyond, like the GFC did, in the scheme of investing and our retirements, our investing lifetime, it is very much short term. But what these corrections provide us is clearly a buying opportunity. As valuations reduce, it means we can buy the same really high quality business at a cheaper price. And what happens behind the scenes when we have these corrections for a business like Google or say Microsoft, two fantastic businesses that have no debt, reinvesting heavily into their business, into personnel, to products and services. None of that stops. The process of improvement, the process of providing better products and services doesn't end. So businesses, for the most part, will be aware of these corrections, but does it change what they do? May it stifle the amount of revenue and profit they get in the short term? It may, for a short amount of time, but it doesn't stop that continued reinvestment back into their businesses to make their products and services stronger and better, and therefore that pushes revenue and profitability up over the longer term. So these corrections offer an opportunity. Now, what are we doing with regards to investing? Well, given that we can't time the market, for our newer clients that are coming on board with cash, what we do is we invest some. But because I don't know where the bottom is, I never know where the top is. We invest some and then we wait, and we progressively invest over time. So we don't go and spend all our money at one spot, because the market could become cheaper. For clients that are currently invested, the advice there is to continue to hold the magnificent businesses that we've accumulated over the last 10 to 20 years. These businesses obviously are affected by the downturns, but they are continually investing into their products and services, as I mentioned before. So what we're doing is we're not trying to time it, we're just trying to take advantage of these corrections that come through, and by chipping away and investing where we got the opportunity. So that's what we're doing. That's where things are at. I have no doubt that in 5 years' time, when we look back on this event, and as serious as it is, I'm not downplaying that at all, but we'll say, Jesus, the share market got cheap. Because when I look back at the graphs from 87, the tech wreck, the GFC, geez, we all wish we went harder during those times when everyone was scared and panicky. And that is mostly not because people watch the share market that strongly, it's because the media plays up the negative, that it scares the hell out of people. So if you are worried about your investments, the first thing I'd recommend that you do is not watch the news or the finance part of it, because it'll just scare you, make you nervous, and make you make irrational decisions. So don't watch the media, and then don't go and look at your share portfolio, and come back to it in 2 or 3 years' time. Now, I know reporting won't allow you to do that, or your financial advisor won't allow you to do that if we're looking at it and reviewing things on a regular basis. But they're the things that I wouldn't focus on. And if you've got spare cash and the market is cheap, it's on sale. It's an opportunity to buy, which I believe shouldn't be missed. And could it get cheaper from here? Absolutely. If it becomes cheaper, it's more so on sale and there's more opportunity. Good luck. Please seek personal financial advice during these times. If you're wavering and scared about the markets, go and talk to your financial advisor. Highly recommended. They will help you make the right decisions at the right time. And as I've told many of my clients, it's during the down times when I think financial advice will be really valuable, because it will help you make the right decisions at the toughest time. Thank you for listening. Appreciate the time. Please give us a thumbs up, subscribe to the channel. That'd be awesome. And we'll see you next week. Bye.